And we are back. Welcome back, folks, to Sans Virtual Enterprise demo number 3. And today's demo is about preparing the tax return for Bob Kunamuna and his sole proprietorship, My 5 Cents. As you can recall from our last 2 demos, the first month on the books for My 5 Cents was December 2013, and My 5 Cents had a net operating loss of $120. Okay, just to recap, and we showed how to prepare the financial statements in Excel and pretty much manually from start to finish, the full gamut. And then we moved on to demo number 2 of how to prepare those same financial statements using an accounting software, and we used QuickBooks Pro. And now this is demo number 3, how to prepare the tax returns for Bob Kunamuna and his sole proprietorship, My 5 Cents. Okay, Bob also works a full-time job at Brainwork Tools, a manufacturing company, where he's a floor manager. Let's take a moment to examine Bob's W-2, and we're going to make this tax return a little bit interesting. Okay, Bob was also married at one point. He was married to Jolene Kunamuna. Unfortunately, Jolene passed in 2011. But before she passed, they managed to have a wonderful son, Bob Kunamuna Jr. And I do also have all the relevant information, date of birth, social security number, to go ahead and prepare the tax returns. Okay, so now Bob is the sole parent of Bob Jr., and he pays daycare expenses for his young son as well, even though his young son is going to grade school already. Okay, so let's get right into preparing the tax returns for Bob Kunamuna and all his activities going on in his sole proprietorship. So let's go to our tax software, Pro Series in this case, and it is a demo software, but it will serve the purpose for what we need it for this demo. Okay, and it is a 2012 software. Nevertheless, like I said, it will still serve the purpose for this demo. Okay, and actually the differences between the 2012 and 2013 tax year, as far as this return is concerned, is not that much different. You do have a different figure for the standard deduction for Bob's case, and also a different figure for the personal exemptions and the mileage and a few other things. But the basic concepts will still be the same, and it's just a matter of those dollar amounts being a little bit different. But getting the sense of how to prepare this return will still, like I said, the software will still serve its purpose for that matter. All right, so here we are at the software. I'm going to go to File, I'm going to New Client, and it's a 2012 US Form 1040. Okay, get that opened up, and you begin entering in the information. So if I go to W-2, get all information off. W-2, Bob's last name. Okay, I'll put my cop locks on. Bob, use B. Social security number, which is completely made up. I hope I'm not guessing anyone's social security number in this demo. Okay. occupation, floor manager. I'm just going to put manager. Date of birth. Bob was born February 13th, 1969. Okay. Wife's last name is the same. First name Jolene. Initial, we're going to use J. And her social security number as well is completely made up. Hope I'm not guessing anyone's social security number doing this. And she is deceased. And her date of birth is July 20th, 1965. And her date of death, let's say, is May, okay, 24th, 2011. Just made that date up, but it was in 2011. We're going to say it was in 2011, okay? And email address, I'm going to use Bob. At Bob, sorry, at my5cents.com. Okay. Phone number for Bob is 770-844-444. It's the same for his home number, okay? Bob's address. Okay, W2 is 777 Mahogany Street. That's Atlanta. Georgia 30348. Okay. Filing status. We're going to come back to that one. What do you think his filing status should be? Do you think it should be head of household? Do you think it should be single? Or do you think it should be, well, what do you think his filing status should be? Okay? Alright, so let's move on. We're going to come back to that one. His dependents, first name, Bob, is Jr. Last name, money as well. Middle, could say B. Okay. Social security number for Bob Money Jr. 864-239999. Okay, and relationship as son. Date of birth 09/4/2002. And he's a dependent child who lives with Bob. Okay. Not qualify for a child tax credit earned in the U.S. Well, he is, so we're not going to check that box. He's a qualifying child for earned income credit if Bob so happens to be and qualifies for earned income credit. which I know he will not be. According to his W-2s, Bob's gross income or wages is $54,000. And we're going to see how his adjusted gross income turns out. And I don't think it's going to go into that threshold, into that qualifying range. Okay. Education, tuition, and fees, no. Qualified child and dependent care expenses incurred in 2012, yes, he did, and he paid $5,000 for child care. Okay. Excuse me. All right, now let's go back to his head of household, his filing status. Okay. Qualifying widower, your spouse died. The tax law states you may still choose to file married filing jointly for the year in which your spouse died. And that means if your spouse died on January 1st of that year or December 31st of that year, you may still choose to file as married filing jointly for that tax year. Now, the following 2 years after that year in which your spouse died, you may choose to file qualifying widow or widower if you have a qualifying dependent, okay? And in Bob's case, it is still within the 2 years after his spouse has died, and he has a qualifying dependent being his son, Bob Jr. Okay? All right, so Bob's filing status is qualifying widower. All right. I had a client that went to one of the big name tax preparation services, and her husband had passed in 2009, I believe it was, and in 2010 they were doing her tax return. They did her tax return for 2009, and they used the proper filing status as married filing jointly, being that the husband had died in that year, 2009. Doing the tax returns for 2010, however, they put her down for her filing status as head of household when she should have been qualifying widow, which gives you the same standard deduction as married filing jointly. So I did her taxes for her for 2011, and then when I looked at her 2010 return as well, I noticed that mistake, and I did the amendment for her 2010 return as well. That made a good bit of difference, because with her it wasn't just that. She also had a ton of other stuff going on, including Social Security and pension and early withdrawal of retirement funds, and it was a mess. But I did her returns for her and did a amendment or two, a couple of amendments, including that same 2009. Even though she had the right filing status, there were still some other errors that were messed up on her 2009 return. So it's important to know what filing status you need to select. All right. It's taxpayer, spouse, qualifying child for an income credit for another person? No. Was this taxpayer or spouse? Home in the United States for more than half? Yes. Check any that applies. Okay. None. We're just going to go with a non-paid preparer. Okay. I'm pretty sure Bob wants the file is returned electronically. It's just faster processing time. File state returned electronically as well. The state of Georgia, yep. Direct deposit withdrawal. Use direct deposit for any federal tax refund, yes. It's going to be a checking account and the routing number. We're going to say is 061 000 104. Account number 1000 50 It's completely made up. Hope it's not anyone's checking account number. Okay, let's continue. Use Form 1040, even if taxpayer qualifies to use Form 1040A. I just love using the 1040 file form. That's what I'm used to. I mean, I could go either or with 1040A or 1040EZ. I will use a 1040EZ if it's really, really simple and basic. Education expenses, none. Standard deduction or itemized deduction. Use standard deduction. No, I don't need to select that right now. Okay, dependent on someone else. Can taxpayer be claimed as dependent of another person? No. Can spouse be claimed? No, she's not alive. So $3 to go to the presidential election campaign fund. Yeah, you can put it in there. That's right. State of residence, Georgia. It's a full year. Okay. Georgia. Love GA. Came here and I love it. Going on 15 years or a little bit around, it's about 15 years now. All right. Now, here you can see we have a checklist of errors here. Let's see. So the software kind of notifies you if there's an error, or if you're missing some information somewhere. We'll come back to this one. Date pin entered for this one. Let's use today's date. Oh. Well, actually, let's use, since it's a 2012 software, we'll have to use in 2013, I believe. Let's see what it does. Okay, let's just use 0303 2013. See what happens. Okay. See what these errors are. Oh, for the child independent care expenses for Bob's child, Bob Jr. When Bob Jr. gets off the school bus, Bob has to go to a after-school care program until Bob Sr. gets done with his day job and gets done working his sole proprietorship. So he goes there for a few hours, okay? And he goes to Shining Star After School Care. Okay. The phone number is 678 555 5555. The address is 1534 Hammonds Bay Boulevard. Okay. And that's in Atlanta, Georgia. Oh, come on, went too fast. Atlanta, Georgia. 30303. Okay. And we have an EIN number of 58. Uh, 58 333 7777. Okay, and the amount paid was $5,000. Okay. Alright, that takes care of all those errors. So now let's enter in Bob's wages information. Okay, wages. I'm going to create a new copy. The EIN number for Bob. Brainwork Tools Inc. It's a full-time job. EIN number is 59 249 4477. Okay. Yep. Pre-filled already. Filled out. Okay, but if it wasn't, you just go ahead and fill in the information. Okay, it was done in the interest of time. I had to enter in that EIN number into the system. Okay, but we still have to enter in all the other information. Okay, and the wages, it's 54,000. 4,000. Okay, federal income tax withheld 6,700. 348. 783. Okay. Alright, there's nothing in 13B. There's nothing there. Employer's state ID number. 1177220 UX. Okay. 4,000 for state wages, state income tax, 3,600. Okay. So nothing in box 18, 19, or 20. Okay, it's not a statutory employees and the clergy. There's no unreported tip income. It's not a substitute form W-2. It's not an inmate. Alright, so we're done with that wages W-2 information. Okay. Let's take a look at his 1040, see what we have so far. $54,000 for wages. Okay, total income. The adjusted gross income. It's $54,000 as well. Taxable income of $34,500. Okay. Which yields a tax due, or Bob's portion. He has to pay his $4,309. Okay. He had $1,600 in credit applied, which is $1,000 for his child and $600 for the child care expenses. Here we go. Child care expenses, $600, and $1,000 for his child tax credit. Okay. So that leaves a balance of $2,709. And $6,700 was withheld from his W-2s. It's from his earnings. Okay, from his wages. So that yields a tax refund of $3,991. And this is before entering in his business information for my 5 cents. So now let's enter that information in. What is this? Schedule A error. Total tax rate for the state of Georgia. Yeah, state, and then state for the full year. Total tax rate for the state of Georgia is 7%. Okay. We're not going to itemize, so that was pretty much irrelevant. We're not going to be needing that information in the software that's promised you for. Let's go to business income, and let's go to Schedule C. I'm going to create one. Okay. File Schedule C. Check this box to file Schedule C, even if you qualify to file Schedule C easy. Okay. Okay, here we go. Principal business or profession, including product or service. And it is a computer repair service. Okay, business principal. Enter principal business code. We're going to use 9999. Oh, one more 9. Okay. Business name, if no separate business name, leave blank. My 5 cents. And let's see if he has an EIN number for my 5 cents, which is 74999999. No. Okay, we must enter a valid EIN number. Well, we're just making up an EIN number. Okay. Business street address. Let's say it's 2000. Euphrates. Oops. Euphrates Avenue. You must enter a valid employer identification number. Okay, well, great. We're not going to do that. We could leave this one blank, then. This is going to be a problem. Let's leave that blank. Okay, now, that's Atlanta, Georgia, 30354. Accrual method of accounting so far. Might switch to hybrid. Did you materially participate in operation? Did Bob materially participate in the operation of this business during 2012? Of course, he fully participated. If you started or acquired this business during 2012, check here. Yeah, we're going to say yes, he did. As you recall, December was the first month on the books, even though he might have started before that, a couple of years or so before, in the basement or somewhere. Did you make any payments in 2012 that would require you to file Form 1099? No. Okay. Enter other gross receipts or sales not reported on 1099. Miss. Okay. The gross receipts were $12.50, and this is from the income statement. Okay. And that's the only gross receipts he had. It was $12.50. Well, let's enter in his expenses. Okay. I printed out the income statement, and I have it here with me, so I'm going to be entering in advertising expense was $250. All right, there were no commission or fees. Repairs and maintenance was $50. Office expense, office rent expense was $500. I wish they gave you the option to just list your expenses at will. Okay, where are the license and fees? Here we go, taxes and license. Okay, that was $95. Utilities expense was $175. Okay, the communications expense was $150. We don't have communications. We'll have to just put in the other expense. Yeah, we don't have. We'll just have to put in the other expense. Okay, where is the other? Right here. No. It says from line 48. So let's go to line 48. There we go. Other expenses. Okay. It's communications. Oh, pre-filled expense. That's 150. Okay. Alright, there you go, 150. Alright, we should have a net loss of $120. Alright, so what are we missing? You got utilities, advertising, repairs, supplies of 150. Supplies expense. Where is the supplies? Right here, supplies. Not listed in part 3. We don't have any other supplies, so supplies at 150. Alright, so we have the negative 120, the loss. Now, you know, even though we have December as the only month on the book so far, Bob drove the entire 2012 up and down doing the legwork for his business. And he drove about 5,000 business miles for the year, for the entire year of 2012. And the state of Georgia, metro cities, the major metro cities are well spread out. It's not like New York and LA, the bigger cities where everything is close together. You can get there by train and bus real easy. So, especially if you live on the north side of town, you got to go all the way in the south side of town, you got to go all the way in the east side of town. That's a lot of driving. Anyway, so Bob drove about 5,000 miles for the entire 2012. And we're going to enter that in, just use the standard mileage deduction for his vehicle expense. Okay, even though we didn't list that one in his income statement preparation. For the car and truck expenses, create a new copy of worksheet. Okay, make a model. Chevy Silverado. Okay, date placed into service, let's say 01/01/2012. Type of vehicle is a truck. It's either a light truck or a big truck. Truck or van. Alright, we can get the mileage information or any mileage reading. Okay. And let's just say the ending mileage reading was 50,000. Okay, and the beginning mileage reading was 30,000. So total miles driven at 20,000 for the year. Okay. Business miles for the year is 5,000. As it pertains to my 5 cents, commuting miles, go back and forth to work, to Brainworks, Tools Inc. That's another 12,000. Other personal miles is 3,000. Okay. Is another vehicle available for personal use? Yes. Was the vehicle available for personal use during hours? Yes. Was the vehicle used primarily by a more than 5% owner? Yes. Excuse me. Is there evidence to support the business use claimed? Yes. Is there evidence written as of this point? No. Bob did not have a logbook and actually have all the receipts, you know, all the places he went to and all that. He can verify in other ways. Does vehicle qualify for standard mileage rate? Yes. Was vehicle leased? No. Okay. And the standard mileage deduction? Oops, sorry. And the standard mileage deduction is $2,775. Okay. And that is what we're going to use, the standard mileage deduction as the vehicle expense, or car and truck expenses. Total actual expenses is not much for a new vehicle, and we're not going to use, there's no repair work, it's not that much. Okay, we're not going to use depreciation, because if we use standard mileage, we can't use depreciation. We can only use depreciation if we use actual vehicle expenses. But Bob opted to use the standard mileage deduction. Okay, so now let's go back to his Schedule C and see what happened now. Okay, now we have $2,775 as his car and truck expenses. Now his net loss went from 120 to his net loss went to $2,895 net loss. Okay, so all the investment is at risk. Everything Bob owns, the full lineup, the full gamut. He wears all the hats. Okay. Alright, all that information is filled in. And this is just the name of the truck. And Bob gave the name of the truck Big Green. It's Big Green. It's a big old green Chevy Silverado. Okay. Alright. So let's see how that changes things on his 1040, his tax return. Remember, before, Bob was looking at a refund somewhere around, I think it was $3,991. Well, let's see what his refund is now. And he has entered in his business income. Well, net loss. Okay, $54,000 from earnings, from his wages. Negative $288.95. It's net loss from his business, Sole Proprietorship. And this is heavily due to his mileage and all his legwork, drumming up business, going back and forth, excuse me, dealing with clients, going to business networking events, seminars, and just traveling back and forth. Like I said, in Georgia is so spread out, so Bob had a whole lot of mileage to cover. All right. So now Bob's adjusted gross income now is $51,105 instead of the $54,000. Now Bob's total refund is $4,426 instead of the $3,991, I believe it was. Okay. All right. So let's get hypothetical a little bit and choose different scenarios for this tax return and see how it affects the refund. Okay, so let's say that Jolene passed back in 2006 or 2005, okay? And Bob, in that case, Bob would have ended up choosing head of household for his status. Let's see how that affects his refund, okay? Let's check that out. Let's go back to the info worksheet. Let's just change date of debt to, let's say 2005, okay? Now the change from qualifying widower to head of household. If qualifying person is child but not dependent, well, the qualifying person is the child and is the dependent of Bob. Okay. All right, so let's see how that affects the refund. Let's go back to the 1040. Let's go down and look at the refund. All right. Now Bob's refund is now at $3,696 as opposed to $4,000 and some change. Okay, so $3,696. Now, let's say that Bob did not have a child. Okay, and he was just a single man, and so his status would be single. Let's see how that affects the refund. Okay, so we'll go from $3,696 to, let's change the info. To single. Okay. And we'll just say no entry here. Well, I think that should do it. We don't need to take all this information out. We just want to see how claiming single affects the refund and what the refund would be in that case. Okay, so let's go back to the 1040 and let's check out the refund. So it went from $3,396, I believe it was. I can't remember, it was 3,000 or something. It was 3,000 and some change. Oh, now look at Bob's refund in this case for claiming single. $926. That's all he, would end up getting back if he was a single guy claiming single, single as his status. Wow. All right. So let's change all this back. So 4,000 and some change to 3,000 and some change to $926. So it's very, very important to have the proper status for your tax return, as you can see. So let's change this all back. It's dependent, and that's 2011. She passed. Okay. And so that said, Bob's proper status as qualifying widower. Your spouse died was 2011. Okay, all errors are gone. And now back to Bob's rightful refund. Of $4,426. Okay. All right. So that was pretty interesting. I hope that helps to see the importance of choosing the right filing status. All right. So that's it. There you have it. Demo number 3. How to prepare the tax returns for a sole proprietorship. And in this case, for Bob and his sole proprietorship. All right, so hopefully you could follow along and prepare your own tax return in time, before the end of the tax season, and save yourself about $400, which is about the average price the major tax preparation services are charging for a return such as the one we just prepared in this demo. Okay, so let's look at the PDF version of it. Okay, here we go. It's a 1040. Kunamana. Alright. Disqualifying widower. Remember that one. Alright. Let's go. Credits for his child and for his child care expenses. Okay, so he's on the hook for $2,274 taxes, but he had $6,700 withheld, so he's due a refund for $4,426. Okay. That's the worksheet for his taxes. Here. Then you had these two credits applied. All right, so if you need anything explained in a little bit more detail, just shoot me an email. Just get in touch with me, or just leave me a note, leave me a message, leave me a comment. Also, if you have any suggestions of a demo you would like to see, just shoot me an email, give me a call. Just leave a note at the bottom of the video that you just seen, and I will respond accordingly. I've had one request so far to do a demo on personal budgeting and how to prepare a budget. Apparently there are a lot of people out there that's struggling with preparing or developing a budget and sticking to that budget, especially in these times. And they're just looking for a demo on a personal budget and some ideas on budgeting. And I may just do that as my next demo. Okay. Until then, I see y'all at the next level, moving forward. SVE, forward. Have a blessed one.